Alrighty, hello everybody, Steve here from The Varied Life. That's the YouTube channel that I have. And for a basic rundown, you see the title here, Retired Overseas, Don't Get FUBAR'd because you didn't file an FBAR. Yeah, this is really, really important. It doesn't matter if you're retired in Korea, Thailand, Philippines, or a host of other nations, or even if you're not retired overseas. If you have bank accounts in other countries, you could get FUBAR'd real bad because you didn't do an FBAR. Now, on The Varied Life, that channel is kind of a mishmash of different videos, and one of these videos deals with me and my wife and how we sold everything in the United States. We put stuff in a couple of suitcases, and we ended up retiring here in Korea. Yeah, it's kind of strange, but it allowed us to retire early. And there's some great benefits. The expenses are less than in the United States, which allowed us to retire earlier, which is always a good thing. You can definitely, retire and it's like, yay! You got to love that. Now, the whole deal with the FBAR, what is the FBAR? Well, we're going to talk about that. And the FBAR is foreign bank and financial accounts. And usually when people go overseas, what they'll do is they sell their house, they'll cash in some investments, or they'll have a big chunk of money, and then they'll transfer that to a foreign bank overseas. So let's say if they go to Korea or Thailand or Philippines or some other foreign country that has a requirement for you to deposit a certain amount of money to meet the visa retirement requirements for that country, you need to pay attention to this because this is super, super important. And if you screw this up, you could be FUBAR'd. And I'm talking royally. Bent over, throw sand in it, and get pumped big time. Now, you might be wondering, well, what is this foreign bank and financial accounts? So that's what we're going to take a look at here. Here, let's make this a little bit smaller. This is from the IRS. So you already know, yeah, this is going to be bad. We're not talking about some minor infractions here. We're talking about big IRS fines and could even end up in prison if you don't file an FBAR. Foreign bank and financial accounts. Per the Bank Secrecy Act, every year you must report certain foreign financial accounts, such as bank accounts, brokerage accounts, mutual funds, to the Treasury Department and keep certain records of those accounts. So, yeah, it doesn't matter if you're overseas or if you're in the United States. If you have a foreign bank account or some type of brokerage account and even cryptocurrency account, you need to report that to the IRS on a Form 114 is what it ends up showing there. And it says a U.S. person, including a citizen, resident, corporation, partnership, limited liability company, trust, and estate, must file an FBAR report if you have a foreign bank account. Now, we're going to look at this as a U.S. citizen or a resident of the United States is going to retire overseas. And so the requirement is to put X amount of money, which is usually, $10,000 or more, or somebody who's saying like, well, I cashed out, I sold my house, I made a bunch of money, so I'm going to put all this money from the sales of my house in the United States, I'm going to put it in and open a foreign bank account, I'm going to put all that money in there, and then I'm going to live happily ever after in the country overseas, and I'm going to enjoy the sand, the beaches, the margaritas, and so on and so forth. Yeah, you need to report that, and we're going to talk about why. This is straight from the IRS website, and you must file a FBAR report if you have a financial interest in or signature or authority over at least one financial account located outside of the United States. If the aggregate value of the foreign financial account exceeds $10,000 at any time during the calendar year reported. Anytime. We're not talking like 6 months, 3 months. Oh, I'm just going to put it in there, for a week. No, this is any time. So that could be one day. Okay, the devil is in the details. We've talked about this. Now, there are some considerations, and it says, but you don't need to report foreign financial accounts that or correspondent or North Star accounts owned by a government entity, owned by an international financial institution, maintained on a U.S. military banking facility, okay, because it's still technically a U.S. bank, held in an individual retirement account of which you're the owner or beneficiary. So in other words, if you set up an IRA in a foreign bank, you don't have to worry about that. But, who does that? Basically nobody. Held in a retirement plan which you're the participant or beneficiary of, part of a trust of which you're a beneficiary if a U.S. person, trustee, agent of the trust files an FBAR reporting these accounts. Again, so if you have a trust or whatever, you don't need to file an FBAR on the calendar year if all your foreign financial accounts are reported on a consolidated FBAR, or you jointly own all your foreign financial accounts with your spouse, and you completed and signed the FinCEN Form 114A authorizing your spouse to file on your behalf, and your spouse reports the jointly owned accounts on a timely signed FBAR. So, note, income tax filing status, such as married filing joint and married filing separate, has no effect on your qualification. So, if you have a bank account, and again, basically what this is saying is you have $10,000 in 1 cent, you have to file an FBAR. Now, the reasons behind this is I've heard many things as saying, well, they want to get away from hiding income so the IRS can't tax you. I've also heard that, this was just for drug dealers and to curb their use of, foreign accounts to deal drugs. But really, in the grand scheme of things, it doesn't really matter originally why this came into being, but just the fact that this now applies if you have more than $10,000 into a foreign account. And we're going to get into, because this can knock your, So anyway, it talks about, and I've included this in the description of the video, so there's a link to this right here. It talks about, how to file, keeping the records, of course, your name, your account number, blah, 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 the, maximum value during the year. Penalties. If you're delinquent in filing, there's some, that can be, penalties. You may be the subject to civil monetary penalties and or criminal penalties for FBAR reporting and or record keeping violations. Assertion of penalties depends on facts and circumstances, the totality of circumstances, when has ever the IRS been merciful? Civil bar penalty maximums in Title 31 of the U.S. Code are adjusted annually for inflation. And we'll actually take a look at that. You can check that here. Filing delinquent, filing an FBAR late or not at all is a violation and may be subject to penalties. So you can't go and say, well, I was ignorant, I didn't know, so, cut me some slack. Kind of like if you were, some minor traffic infraction and the police have the option to, I'll just give you a warning this time. You may be subject to penalties. It all depends on how the IRS feels, and I've never known the IRS to be in a good mood, so keep that in mind. So anyway, if the IRS hasn't contacted you about a late FBAR and you're not under civil or criminal investigation, you should file late FBARs as soon as possible to keep the potential penalties to a minimum. This is serious. This is really serious. And to my knowledge, I searched on social media and I couldn't find any expat that talked about this in depth of saying, okay, well, if you're retired overseas and you have a foreign bank account and you have more than $10,000, you need to file an FBAR. I haven't seen anybody do that. So since I am retired overseas, and so I have a vested interest in this because I don't want fines and penalties and or criminal prosecution for this, which could affect my overseas visa and get me kicked out of the country that I'm in. You need to follow the rules. So that's what we're going to take a look at here. It's got some other resources and things like that, hotline, all of this. So the IRS they're going to get involved, and whether you like it or not, or I don't like it, but it is what it is. Next thing we're going to take a look at is what happens if you do not file your FinCEN 114. And is the most notorious up until early 2023. The IRS was in the habit of issuing penalties against non-compliant taxpayers at $10,000 per account per year. Wow. So in other words, let's just say you had $10,001 in a foreign bank account overseas and you did not file an FBAR, and the IRS can charge you a fee of $10,000 per account for noncompliance and not filing that FBAR. But I only had $10,001 in the account. If you are over $10,000 and you didn't file an FBAR, they can charge you $10,000 per account. And that's not even the maximum. That's how serious this is. This could spell disaster for taxpayers who had several unreported accounts over many years. So in other words, let's say, you saw some videos and it was like, oh, I think I can retire overseas. And you do the math and I've got this and this. I'll sell the house. I'll make a profit. I'll put it in the bank over there and I'll just live off of, my proceeds of the sale of my house, which was, hundreds of thousands of dollars. And you do that for 5 years. If it's over $10,000, it's $10,000 per account per year. So 5 years, that could be $50,000 in penalties. And those are just the minimum penalties. Then in 2023, the Supreme Court case of Bittner put a stop to the IRS penalty madness and limited non-willful bar penalties to $10,000 per year, adjust for inflation. So what happens now when a taxpayer misses prior year FBAR filing and wants to go back to file FBARs for previous years? Reasonable cause to avoid FBAR penalties. When a taxpayer can show their noncompliance was due to reasonable cause and not willful neglect, because people do that, the IRS is not able to issue penalties. So that's good news. Therefore, the first consideration before making any representation to the IRS about the late filings is to determine if the taxpayer can show reasonable cause. Reasonable cause is going to say, well, and mostly what it'll come down to is, well, I didn't know. That's going to be the biggest thing right there. But ignorance does not excuse you from the law. And again, it depends on the IRS. At the time of this article that was written, and this is by goldinglawyers.com, the IRS still offers delinquent FBAR submission procedures when a taxpayer qualifies. The IRS offers an FBAR penalty waiver. It is important to note the IRS does not reserve the right to change the parameters of the program. Does reserve the right to change the parameters of the program, usually to the taxpayer's detriment, as they did with DERSPIS, whatever that is. So in other words, they can have some leniency, but usually that's not the case. Non-willful penalties will be issued on a per-year basis. In general, the IRS can go back 6 years to issue penalties. So this whole thing usually, I only need to keep my tax returns for 3 years. That's all I'm required. So anything older than that, the IRS, we can, give them the bird. Not with FBAR. It can go back 6 years. And then, it's the IRS. They can do what they want. Willful FBAR penalty. So if you know about this, so in other words, me telling you this, and then you willfully withhold and do not file an FBAR, now you've gone in because it's recorded and somebody, you left a comment and it later goes to court and it shows, well, here's you are, Mr. Johnson, and you left a comment and blah. And so you obviously watched the video and saw the links and so on and so forth. And Mr. Wilson, told you about this thing. And then you still didn't file an FBAR. That means willful withholding of the FBAR. It's not going to look good. So, the IRS has the authority to issue penalties up to 50% of the maximum value per year, up to 100% of value missed account reporting within the compliance period. Ouch! Talk about bend over. when a taxpayer is determined to have acted willfully. There is no bright line test to determine willfulness. It is based upon the totality of circumstances. And while the courts disagree on the specific of what qualifies as willful, many have affirmed that willingness can include reckless disregard and willful blindness. Remember I was telling you about that? Ignorance is bliss. No, it's not. Criminal penalties. Let's take a look at this. Criminal penalties, high fines, and incarceration. That means going to prison, folks. Can happen, but it is pretty rare and tends to only happen in situations where the taxpayer also committed other tax or reporting violations, such as fraud, evasion, structuring, and money laundering. So, but again, there's minimum penalties and there's maximum penalties. There isn't just a penalty, there is a range. So depending on how the IRS feels on that day, and maybe they had a bad night out and they argued with their spouse and you're going through a divorce, or they're hungover, whatever it is, and the IRS is not feeling good, that can have a severe impact upon the penalties, fees and penalties, I imagine. Of course they'll say no, but, let's face it, let's be real. Late filing penalties may be reduced or avoided. It talks about that. Current year versus prior year noncompliance. Avoid false offshore disclosures, submissions, willful and non-willful. And again, this is a tax firm. I know nothing about them, but this had, as I was searching through and looking for information on FBAR, I found this article to be the most easy to read that I have found. So there's that. But when we take a look at some of the penalties, and this is what we're going to take a look at here. Let's blow this up a little bit. This is the penalties for the FBAR. This is an IRS publication, and that'll be in the link below, or you can just check that out for yourself. You can file online, the whole 9 yards. Civil monetary FBAR penalties have varying upper limits, but no minimum. These upper limits must be adjusted annually for inflation, blah, 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 keeping records. Negligent violation, civil penalty, the code, the amount up to, and then it talks about 31 CFR 1010.821, and a pattern of neglect, non-willful. Well, it all goes back to this 1010-821 penalty adjustment table. Now, this is from the Cornell Law School, and talking about inflation adjustments, maximum civil monetary penalties, and this could get ugly. So let's take a look at this. So related to record-keeping violations for funds transfer, penalties as last amended by statute, $10,000. Maximum penalty amounts, or range of minimum and maximum penalty amounts, after January 25th, 2024. It's 2024. Notice how it went from $10,000 to $25,597. Yeah, this could wipe out some people. Willful or grossly negligent record-keeping violations. It was 10 grand, and now it's up to the 25 grand. Failure to terminate correspondent relationship with a foreign bank. That can go from 10,000 to 17,000. General civil penalty provisions for willful violations of Bank Secrecy Act, 25,000 to 100,000. And of course, now in 2024, the IRS is upping their game to $69,733, all the way up to $278,937. And what's interesting is that you can have multiple charges. So start adding those numbers up, and you can see this can get severely, this could be bad. Foreign national agency transaction, non-willful violation, went from 10 to 16,117. Willful violation of transaction from 100,000 to 166. Negligent violation by financial institution, non-financial trade or business, from 500 to 1394. So apparently, if you're a business or a violation by a financial institution, you have less of a fine, which is insane, than what an individual has. I mean, that is just insane. $13.94. So somebody greased the palms of the IRS to set up these penalties so that individuals get bent over and thrown sand in and get pumped rigorously, but businesses are just $13.94. Just cut us a check. Pattern of negligent activity by a financial institution or non-financial trade or business, $50,000 to $108,000, and you can read some of these other things here. Special accounts, shell bank, special measures, civil penalty for failure to register as money transmitting business. That's not going to affect you and I, the people who are living overseas, but they still got some big fines to pay. So really what we're looking at here is, if you don't keep the proper records, it can be a fine of up to $25,000, almost $26,000. Willful or grossly negligent record keeping, that could go right along with it. That's another $25,000. Failure to terminate correspondent relationship with foreign bank. Not really sure what that means, but that could be another $17,000 added on to that. General civil penalty can be $69,000 all the way up to $278,000 plus. That's huge. Those are some monster fines for not filing an FBAR. So anyway, all of this is in the description box down below. You can click on these links. Of course, you can do more of an exhaustive search. And if you do have some problems, you should probably contact a lawyer, a tax lawyer, to see what they can do to help you out. Now, how does this apply to people like you and me or somebody who wants to retire overseas? So we've already retired overseas. We came to Korea. We've been here over a year. We have an apartment, a car. We have Korean bank accounts and so on and so forth. So with that being said, when we bought, let's put it this way. I don't want to have to deal with this because taking a ton of money and putting it into a foreign bank, like we are here in Korea, into a Korean bank, I'm going to draw interest off of that. And then off of that interest, I'm going to have to pay taxes. So since my bank account is on a military base, and that's one of the exceptions that you get, that if the bank that you're drawing from is on a military base and it's a U.S. bank, then I don't have to report it because it's already in the U.S. system. So with that said, I don't have to worry about filing an FBAR, and that's what I highly recommend. Now, I'm not a lawyer. I'm not giving any advice or anything like that, but from what I'm reading here, it makes sense to not have anywhere close to $10,000 in a foreign account, because what I'll do if I need money is just go to my bank on post, take that, do a money exchange, then I have the local currency, and then I can buy whatever I want, okay? Large ticket items, whatever it is, and I don't have to worry about filing an FBAR. Because remember, the requirements for an FBAR is you have anything over $10,000 at any time. Anytime. Even if it's just a day, you have to file an FBAR. So in other words, let's say you retire in a foreign country and you have a bunch of money in the United States in a bank, and then you're in that foreign country, you open up a foreign bank account, and you're like, okay, well, I'm going to transfer some money because I need to buy furniture. I'm going to buy a car, and there are some other things that I want to buy, big screen TV and whatever, and you're moving, you're buying stuff for the house, and you're getting set up, so you're going to need a lot of money. Buying a car is thousands of dollars. So let's say you take $15,000 and you put it into a foreign bank. That exceeds the limit for the IRS, so you should file an FBAR. Otherwise, you can get dinged up to $25,000. The minimum, the last amended statute was $10,000. Now in 2024, after January 25th, it's $25,000. On a lot of those, and $17,000, and $69,000 to $278,000. So again, do you really want to bank on the kindness and the willingness of the IRS to be merciful to you? Yeah, I wouldn't count on that. So what we do is that anytime I need money, I go to my U.S. bank on a military base because I'm a military retiree. I take that money out, I get it exchanged into the local currency, and then I buy whatever I need, okay? so that I don't have to file that FBAR. Yeah, that's the whole thing. And what's interesting is that when you do your taxes and you're overseas, if you do your taxes by yourself and you don't know this information, you don't know that you need to file an FBAR. But tax preparers overseas that know this information or should know this information, that when you do your taxes overseas, even if you're a U.S. citizen or whatever, we're just going to say U.S. citizen, that they will ask you this question. They will say, do you have any accounts overseas? And I even remember back when we were still living in the United States, do you have any foreign bank accounts? Well, and we'd say, no, of course not. This is before we knew we were going to retire in Korea. But the reason that they asked that is because of the FBAR, the Foreign Bank and Financial Accounts requirement that you need to file with the IRS. So, yeah, how can this affect you if you're moving overseas? Well, say, for example, the example of you want to buy a car. You take the money out, you exchange it, and you put that money into your foreign bank, and it's $15,000 because you're going to buy a really nice car, jamming radio system with navigation and the heated massage seats, the whole 9 yards, sunroof, the fuzzy dice hanging from the mirror. Yeah, you're going to pimp it out. If it's in that bank account for 1 day, you need to report an FBAR. Now, is it really is it going to be really that bad if it's 1 day? I don't know. It depends. But if we follow the letter of the law, according to the IRS, yeah, they can ding you. So in other words, let's say you did that and you did not file an FBAR, the penalty is $25,597, but you only put in $15,000. You now have to pay that to the IRS. With what? Now it's like, okay, well, can I pay that or can I? That could ruin, 25 grand for somebody that's living overseas, especially who's retired. For everyday working people like you and me, 25 grand, that is a huge amount of money. Even if you just went over, $10,000 and won $10,001, it still meets that cutoff of, hey, you need to file and you didn't, so you're going to get charged, 25 grand. That can kill a lot of people. That can hurt a lot of people severely. So the whole purpose of this video is to let people know about the FBAR and if you have a foreign account overseas. And yeah, that's why it's important to know what you're talking about. We talked about on this channel about how you need to know the local laws, how you need to know, the banking system and how to do things and all of, medical and health and all of that. That's great and all, but there are still requirements. And I haven't seen a lot of people talk about, filing an FBAR for the retirees or the expats that are overseas and have foreign bank accounts. I just see that there is some, but it's not on a wide scale as I would like it to be. And unfortunately, a lot of people don't know this. They will watch, the people who go overseas and they'll spend a month in Thailand or Vietnam or whatever, and they'll give you a breakdown or a rundown. Oh, these are the expenses, and you could live here on $500 a month or $1,000 a month, but they don't tell you about the FBAR, and that could get you FUBAR'd. If you don't know what FUBAR'd is, look it up. It can be really bad. So yeah, now in practicality, how does this work out? So for example, we bought our apartment. What we could have done is gone to our U.S. bank, got a large sum of money, way more than $10,000 to buy this apartment that we're in, and we could have taken that and then deposited that into a Korean bank. You can do that, but you would have to file an FBAR for that year. So you would have to let your tax attorney or your tax preparer know, or you would have to file that with the required information to the IRS so that you don't get any penalties. To not even have to deal with that at all, what you could do is withdraw the money from your U.S. bank on post, exchange it for the local currency, and then like when we bought our apartment, the seller of the apartment knew that we were buying in cash and said, well, just bring the cash. I don't want to do a bank transfer. And that's a thing here in Korea. A lot of people do that. Now, they do wire transfers. You can do that. But again, if it's over that amount, you need to take into consideration the tax requirements of filing an FBAR. Because if you don't, there can be some huge, huge fines, like we pointed out here. I mean, those are some big fines there. Maximum penalty amounts or range of minimum. I mean, 25 grand a pop. That is huge. I mean, look at those. So you could, if you didn't report it, you had a record-keeping violation, so that's 25 grand. Willfully or grossly negligent record-keeping violation. So in other words, you just were ignorant. Ignorance is not bliss. Failure to terminate, so I mean, you could get charged, let's see, 25, maybe 70, 69 right here. So, we're talking over $100,000 in fines and penalties if they charged you with these three things, just three things. That's per year, per account. So if you have multiple accounts that have more than $10,000 in dollars, you're talking some massive fines and penalties that would wipe out the average person, John and Jane Q. Public, who are trying to retire or retired overseas. That could stop your retirement in a heartbeat. And if you couldn't pay that back, which you can schedule with the IRS to pay back so much per year for X amount of years, but if you can't, guess what? They're going to garnish your wages, and then they can send you to prison. Yeah, that's how serious this is. So, you definitely need to take a look at this because, you could be FUBAR'd beyond belief if you don't file an FBAR and you have an overseas bank account that has more than $10,000. Now, here's a disclaimer. You need to check the law because just like this said, the penalties as last amended by the statute, as we saw here, that was prior to 25 January 2024. So last year, the fines were basically $10,000. Excuse me. Was basically $10,000. So, but now they've upped it. So, you need to do your due diligence. You need to check with the IRS because things change from year to year, within the year to year. And like I said, changes can occur to immigration law, to your immigration status, to banking, to taxes, to healthcare insurance, and the whole nine yards. All of those things can change in a heartbeat. So when you live overseas, you need to keep your ear to the ground when it comes to things that are going to affect you, and not filing an FBAR will definitely affect you. So anyway, I don't know if a lot of people have dealt with this, but all of the videos that kind of have, a guy and his wife going around all these countries, and basically what they're doing is they're just going on vacation for a month. They're just doing a tourist visa, and they just tell you, oh, this would be a great place to retire because rent is this, electricity is this, food is this, look at all these great places. But they never tell you about the very important stuff like the FBAR. They're all like, oh, just, oh, it's great. You can retire overseas and oh, you can live here on, $1,000 a month and no problem. But they never tell you about the FBAR. That should tell you that, it's nice to know. It's nice to see videos of where you could possibly retire for, low expenses and things like that. I totally get it. There's a place for that. But I also think it's disingenuous to not offer and remind people. It's like, hey, there are some tax considerations when you retire overseas. And what are those requirements? And what are the penalties if you don't file correctly? Yeah. I mean, so anyway, that's what we got going on. And I thought this was very important. And the more I read up on this, and the more I saw the lack of people discussing this, I really thought that I need to put out a video here. And especially when we talk about, the fines and the penalties, when we talk about stuff like this, failure to, you have a record keeping violation for not filing an FBAR with the IRS, and the fee is, the penalty is 25 grand. I mean, those things is $69,000 to $278,000. That could totally wipe out your retirement plans for the future, and it could put you into the poorhouse. And even then, it could land you in prison in some cases. So ignorance is not bliss. You need to know what you're talking about, and hopefully you will do some more research and stay up to date on retiring or being retired overseas when it comes to foreign banking and the requirements of the IRS when you do that. So there is a method to the madness. I really don't think the IRS should be involved in this, but hey, I'm not the IRS. I think we should just have a flat tax of 10% on everybody and then just call it good, and maybe have a flat tax of 10% for businesses, and boom, that's our tax system. Let's get rid of the IRS, just do a national sales tax, and then we're done. You probably need like 10 people to run the IRS once you did that, because that's all you need to do. Have it as a point of sale tax, like a fair tax, so that way everybody pays the same percentage. So if I'm only making $20,000 a year, yeah, whatever I buy, there's a 10% tax. If I'm a gazillionaire, yeah, there's going to be a 10% tax. So, it's 10%. That'll never happen. But what I do know is that the IRS, when they get a bug up their nose, and now the problem is everything's on computer. See, before in the past, it ended up that people actually had to physically go through tax files and documents. Oh, here's Johnny. Nope, he's good. Okay, let's go through another one. Nope, this one's good. Here's the one he went over. So we'll audit him and we'll audit her. And then, there's another. So the IRS was painfully backlogged and behind. But now with the advent of computers and databases and things where now you have computers that are automatically searching for these people that have not filed an FBAR, and it's like they can show the transactions of where your money has went from the United States to a foreign bank account, boom, it automatically raises a red flag. Kind of like now it's just like they send out a form letter, boom, here you are. Oh, now you owe us 25 grand for not reporting. It's all automated. That should give you pause. That should be enough of a wake-up call for you to say, hey, I better have my ducks in a row when I retire overseas. Otherwise, yeah, you're going to get FUBAR'd, and it's going to hurt. It's going to hurt bad. So anyway, that's the video that we have for today. This is highly important because it could mean hundreds of thousands of dollars for you, maybe even criminal jail time, prison, and that could cut short your retirement. You'd have a retirement, but it would be in a federal prison, and that doesn't seem like a good retirement plan to me. So anyway, take this information for what it is. This is not professional legal advice, but I'm just highlighting something that you probably need to take a look at and consult a certified tax professional when we're talking about overseas accounts, FBARs, reporting, and so on and so forth. I'm just kind of highlighting what you should probably take a look at if you're retired overseas, and do what's right. Because if you do what's right, then, you can't be wrong, usually. So anyway, so that's what we got going on. So if you have any experience with the IRS and foreign bank accounts, or problems with the IRS as in general, put that in the comment section down below, because, there's always bad stuff about the IRS. Put that in the comments. If you're thinking about retiring overseas, does this information change what you would do if you retire, or if you're going to retire overseas? Put that in the comment section down below. So anyway, don't forget to like and subscribe to the Varied Life channel. We have videos on being retired overseas, retired in Korea. I got some fitness video stuff. I got some reactions. I do some painting of miniatures and models, kind of like that dude there. Something to do since I'm retired besides going to the gym. But that it's a mishmash of stuff. But would appreciate the like and the thumbs up. So go ahead and do that. Like and subscribe. Hit that all button so you can get future notifications about this and other information. Maybe I'll do other videos on some other stuff that you like. I don't know. But appreciate the like. If you have never heard what an FBAR is before, please smash that like button. I would appreciate that. So with that being said, hope you have a good weekend. Peace. Definitely don't want to get FUBAR'd.